Somewhere about this time last summer, I did a video where we pointed out that it looked like the US housing market could have a soft landing in 2023. Anytime you use the phrase soft landing, it should come with a trigger warning because some folks get really angry to hear it. But I think it's pretty indisputable now that we got a soft landing. The market was roaring, way too hot, bidding wars, all the speculators, the investors who thought they couldn't lose, and a soft landing is really how you end that crazy cycle without massive pain of a market crash or bubble burst. In the fall last year, after mortgage rates jumped to 7.5%, I thought maybe we'd missed the call, like thinking that a soft landing was in the works. By October last year, it looked like 2023 would have rising inventory and falling home prices for the year. I grew bearish, pretty bearish again for the year. But since January, buyers have defied all those expectations. Sellers have not materialized, and buyers are really buying everything that becomes available. Inventory has fallen all year. The peak of inventory for 2023 so far was New Year's week, which is just insane. And while home prices fell in July and September last year, they've largely, most of the country, recovered now. Three of the four Altos price measures are now showing positive year over year price gains versus last year. The median price of the homes in contract right now, those that are selling, is higher than last year. And the new sales each week are up a few percent over last year. And this is what a soft landing looks like. The froth is out of the market, but we had no crash. So, could the market crash from here in the future? Of course, it could. Inflation, if inflation, for example, reheats and mortgage rates jump again, buyers are very sensitive. If the economy fails in its soft landing and craters really hard and unemployment spikes, we could see inventory from distressed sellers emerge, for example, in 2025. But that's a long way out. So, right now, soft landing. And this is why Altos Research tracks every home for sale in the country every week. We analyze all the pricing, all the supply and demand, all the changes in that data, and we make it available to you before you see it in the traditional channels. I'm Mike Simonsen. I'm the founder of Altos, and let's look at the data as we roll into the second half of 2023. The median price of single family homes on the market in the US is $450,000 right now. That's essentially unchanged from last year. It's just a few hundred bucks lower. In the dark red line here, you can see how rapidly home prices were adjusting lower in July last year. This year prices are past their annual peak and will decline, but in a few weeks it looks like the market will be up year over year on all four of those measures. The median price of the newly listed cohort, all the homes that hit the market in the last week, is about $410,000. That's higher than last year at this time. Last year, if you listed your home in July, you priced at a discount because you knew that the buyers had already left. Those buyers are generally here this year. So prices are up, now up year over year. The light red line on this chart, you can see the big rapid price declines of the new listings in the second half of 2022. The seasonal decline this year will be less steep, so annual prices will increase as the year progresses. I've been watching the price of the new pendings each week as a leading indicator of future sales. So this one's been really compelling. Each week, the homes that go newly into contract, where are they priced? This is a view of like what the buyers are buying at any given moment. The median price of the new pendings this week is $379,000. That's down a little bit from last week, and you can see how the home sales each week now are consistently priced higher than they were last year. The sales that are happening are consistently higher than they were last year at this time in July. The dark red line here is the curve from this year. The light red line is the curve from last year. So look at those big buyer discounts in July and September last year with the mortgage rate spikes. So when I talk about soft landing, this is where you can really see how it could get derailed. Home buyers are sensitive to big jumps in mortgage rates. And if I'm getting ready to buy a house and the mortgage rates jump in a week, I either hold off, I don't buy it, or I have to buy a cheaper home. And so we can see the immediate impact of last year's mortgage rate spikes in the price of each week's new pendings. And you can see how right now home prices are holding up each week. And so fortunately for the soft landing, the inflation numbers were encouraging last week. So mortgage rates actually fell, and that should give demand to continued demand to buyers. Will the rest of the year continue to show home price gains? As of right now, the data says yes. We can see the homes on the market now are not taking price cuts at any unusual rate. And that's because the sellers see demands at the current asking prices. Homes that are on the market now, if they don't have offers, they take a price cut. They maybe get an offer in August. Then that sale closes in September or October, and that gets reported in October or November. So we can see mostly almost through the end of the year at how the soft landing home prices are holding up. In this chart, the dark red line is the curve of price reductions through the year so far. Currently, 33.1% of the homes on the market, the single family homes on the market, have taken a price cut. This is right about the same as 2018, 2019, for example. And it shows us that demand isn't crazy like during the pandemic, but is just fine for the current levels of supply of homes for sale. As the year goes on, more homes, still on the market will take a discount in order to attract buyers in the fall. And it gets harder to attract buyers in the fall, so you do a little discount. This is a normal seasonal curve here, and this is what a balanced housing market looks like. The as the uh, as the real estate market's soft landing really has become apparent, the housing bears have switched from fearing that home prices are tanking to pointing out that the sales transaction volume, the sales rate, is way down. And this is accurate. We have fewer sales now than we did a year ago. And interestingly, as part of this soft landing, though, the sales rate are now gradually catching up with last year. There are now 378,000 single family homes in the contract pending stage. And that's what we're looking at here. That's 10% fewer than last year and fractionally fewer than last week. So we're past the seasonal peak for sales volume. So each week it should generally see fewer pendings. The height of each bar here is the total number of homes that are in contract at a given time. The light portion of the bar are those newly in contract in a given week. So last year, while the market was still slowing, at this point last year. So right now, while there are 10% fewer homes in contract this week, there were only 4% fewer new homes going into contract. So the new sales were just 4% fewer people making offers this week than last year at this time. 58,000 new contracts on single family homes this year versus just over 60,000 last year, mid July. So we're gradually getting closer to last year's pace. I imagine by later in the summer, we'll be showing actually more sales, year over year sales rate gains than we had last year, especially if mortgage rates drift lower from here. That could change if rates drift higher. The second half of 2023 looks like we'll have more sales on less inventory than the year prior. Now, it's not a lot of sales. Demand is way lower than during the pandemic frenziness, and so we're also severely limited on supply, so that any uptick in demand doesn't really have anywhere to go. But at the end of last year was stopped so cold, and this year is warmer on all measures, that's what I mean when we have soft landing. There are 470,000 single family homes on the market now. That's up 1% from last week. It's 7.5% fewer homes on the market now than last year at this time. That inventory gap now is growing wider each day, fewer homes compared to last year. And even with mortgage rates at 7% or around 7%, our sales rate has remained strong enough to keep inventory imbalance. And as we started 2023 with 490,000 single family homes on the market, and it's wild that that moment, New Year's week this year, might prove to be the highest inventory of homes that you could buy for the whole year. Usually, inventory peaks in July, and we had more homes on the market over New Year's than we do now. So normally it peaks at the end of July. In slowdown years like 2018 or 2022, last year, right, inventory can keep growing later into the summer or even the fall. Sellers keep listing, but buyers hold back, and so inventory builds. This is not a slowdown year, and so we could see inventory peak in just a couple of weeks at the end of July. And it could be, therefore, that January 1 turns out to be the greatest inventory for this year. And that's, again, what a soft landing looks like. There are some local markets which have not landed as softly as the whole country. Um, somewhere demand hasn't recovered at all yet. For example, downtown San Francisco still seems to have a lot of churn to experience to come, for example. So as I've said before, a soft landing in 2023 does not mean that home prices will never go down. That'd be silly to presume. Soft landing, though, describes how the market has successfully transitioned from crazy hot to much more stable without going through a overly painful correction. So if you need to understand your local market and you need to communicate what's happening in that local market to buyers and sellers, go to altosresearch.com and book a free consult with our team. We will help you interpret the crazy market right now for your clients. This is a critical time to be properly informed about the market. So many people are not. So please join us. More next week.